Good afternoon, ladies and gentlemen, and welcome to the ANGUS Energy PLC Investor Update presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard and will notify you when they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to George Lucan, Managing Director, and Andrew Hollis, Technical Director of ANGUS Energy PLC. Good afternoon.
Thank you, Paul. Good afternoon, ladies and gentlemen. This presentation, this update has been promised for a little while. It to some extent in direct response to the government's white paper, which is one of the most extensive revisions of our nation's energy policy we've seen in a long while. We're not the only company clearly wrestling with the implications of this white paper. Pretty much every oil company, from the largest to the smallest, is thinking along the lines we're thinking of how do we fit into the new picture. What's the impact on our legacy assets? What is the best way in which we can continue to make money for our shareholders in a changing energy environment? Now, I've laid out there on the front page 4 areas, but it's essentially 3 immediate areas. We have these legacy oil producing assets at Brockham and Lidsey. I haven't omitted Balcombe deliberately because of the recent council decision, merely because we don't have what I believe would be a fit for purpose competent persons report for the reservoir as we understand it. Nonetheless, that's one of the producing assets, potentially producing assets. Deep thermal in the UK is something you've heard a lot about from us. I'd like to elaborate more, and I hope to do so almost continuously this year. And the third you're all familiar with, which is our gas interests in Lincolnshire, what was formerly the largest UK onshore gas field. Those are the 3 key strands. Now, do we stop there? Well, we're a small company with some limited resources, but there's obvious other opportunities in storage, energy storage, battery storage, biomass, waste to energy, and so forth. Solar and wind are a pretty crowded space, but I mention them as ancillary, as points of interest, and actually opportunistically. There may be occasions when we see sites, or we have sites, where these things, these particular avenues could be explored further. But it's essentially geothermal, which is a natural run-in from our drilling experience in oil and gas, and then the oil assets, legacy oil assets, I'm afraid they are, in a 15-year view or a 10-year view, and clean gas. Anyway, moving on. I'm going to go off video to conserve bandwidth here. Now, everyone's aware that, particularly in electricity, we're rapidly going green. In fact, this graph you see here terminates around 2018-19. Even since then, in the last 2 years, the proportion here, that is biofuels, wind and solar in particular, have grown very, very markedly. Still, the bulk of electric generation is natural gas, and nuclear's share is very gently declining. I'm not an expert in nuclear, how quickly that decline will continue, but this section here has very rapidly increased. Now, there's some very obvious points to rapidly make about wind and solar, which is that sometimes the sun doesn't shine and sometimes the wind doesn't blow, which means that this capacity here has to suddenly expand to fill the gap. And one of the things that not many people seem to have reflected on is the rise in the cost of electricity in the last 20 years. It used to be, I think, about 67% of the CPI and it's risen to about 130 percent of the CPI. It used to be the days, you will remember, some of you, when the pence per kilowatt hour on your energy bills wasn't so wildly different on the electric as to the gas, and now it is very wildly different. So I think I'm paying 3p a kilowatt hour on my gas at any rate, but something like 18 plus p on my electric, and 3p on gas equates to about 90p a therm. So you can imagine the therm equivalent for the electric. Now, very frankly, some of that is because of this wind and solar. This wind and solar demands redundant gas capacity be maintained to back it up. So its true cost isn't really disclosed or taken out into a separate part of the equation, so that we could all look at the true cost of wind and solar. And one of the important points I'm coming to, I hope not too slowly, is that geothermal and to some extent hydropower and nuclear as options don't have that problem. They don't demand huge amounts of redundant capacity. And with every bit of redundant capacity, you have to raise the electricity price, basically to pay some poor gas power plant operator to stay open for whatever, 100 days of the year, rather than, but maintain the place more or less fully manned, and with all the associated regulatory and other costs of maintenance. So there, as this lovely wind and solar grows much beyond, I think it hit almost 47% a year ago, the problem only gets worse in terms of the cost to the nation of subsidizing it secretly, in effect providing all this redundant capacity to deal with the outages. The second slide here really shows the magnitude of the problem that faces most Western countries in terms of transition. You can see that although we've got some friendly, say 47% of this electric bit here is now nice and green, the rest isn't. We are an overwhelming carbon economy. This, of course, is probably feedstock to here, but then and a little bit of airline kerosene. But the bulk of it is you and I driving around in cars. And yes, there's these targets for electric by 2030, which are ambitious, but even they don't take into account some of the environmental damage from cobalt and lithium, which I don't think has been fully factored into everybody's equations. The nicest solution for this would be a clean burning fuel like hydrogen, but as we know, conversion of methane to hydrogen, or even generation of so-called green methane, has not proven yet to be something we can take to commodity scale very easily. Natural gas is a relatively cleaner burning fuel, obviously, than oil, and that is overwhelmingly here, of course, just heat for our houses. And that's another aspect in which geothermal is interesting, because it's not actually the geothermal that we're looking at, but a number of our compares in the industry here, the industry, oil and gas industry, are also looking at, which is district heating. In our view, we've not looked at that avenue, and Andrew Hollis, our technical director, can come to why, but essentially we regard it as requiring so much support from local and national government as to be not our favoured choice. So what do we say briefly? What's us for Angus? And this is very, very important to us. It may not sound important to you, but every time we look for a permit, a permission, an authorization from any part of society now, we need to be able to say these things, and we want to be able to say these things as well. So for us, it's a few points. We've got to be realistic about it, which is that, just to go back for a second, this lot ain't going away in a hurry, however hard we try. So we're realists. We're innovators. We're trying to put in hydrogen-ready pipe. We're actually closely following some of the thermal cracking programs which and developments. We've had already had some important meetings with one of the representatives of the Humber Hydrogen Initiative. We're on it. We're looking at anything we can provide to that mix. Certainly, I would regard methane to hydrogen conversion as the one solution for clean burning automobiles in the long run. But we're looking also at stewardship, which is regarding our assets and our sites as things we have stewardship over and we have to develop responsibly, always looking at end of life, alternative uses where appropriate, or even simultaneous uses, which is difficult, as you know, when dealing with flammable or highly pressured materials. We'd like to move, and I think geothermal to be reliable providers, and that's the point I've made very strongly earlier, which is that wind and solar aren't that. They're relatively high cost and unreliable. And we actually like being small scale. That doesn't mean that we don't achieve large size as a company, but in a crowded country like Britain or most of Western Europe, there isn't a lot of room for big projects. You can park them a long way offshore, but if you want to get good projects done, you have to get very local, keep it small scale, keep it inoffensive, nexus well with the local community. And that's something which we would aim to do. And be good neighbours, actually, as we've said there. Honest. This sounds like a little bit of a marketing blurb. I would say honest in that we want to make money. It would be the simple truth. And we want to make money for our shareholders to keep them engaged and invested in us and supporting us. So to summarise it, we've got a deep geothermal project, which Andrew will talk a little bit about. It's baseload generation. We have looked at heat and power generation for geothermally assisted agriculture. We've done extensive work at Saltfleetby on repurposing wells for mid-range electricity generation, not flash generation, but EGS, sorry. At Thurlethorpe, we put in hydrogen-ready pipe, but I'm making the point here now, and I will make it again toward the end of this presentation. The cash flows from existing hydrocarbon streams are a vital source of our finance in transition. We cannot be in a situation where regulators or planners start saying, well, transition isn't happening fast enough. Stop doing that now and just somehow dig us a geothermal well or show us a solar park, whatever. That life doesn't work like that. Transition is a verb of movement, and it implies steady movement, not having one's legs cut off and be left scrabbling on the ground, trying to get into whatever is considered the latest and greatest. So anyway, without further ado, I had to set that out because, as I say, we now face funders and all sorts of planners and regulators, and you have to be able to look them in the face and say that's the case, and it is. This is the new Angus. This is where we want to be. So one component of that is gas and exploiting the gas field. I'm acutely conscious from the questions that I've received today and the many posts and questions we've received on our website of how frustrated everybody is with the speed of the gas field development here. I think Andrew will show a little bit later that a lot of the cause of this has been actually getting the funding in place. Nonetheless, Andrew, actually, will you talk a little bit about this slide since you prepared it?
Yes, absolutely. I guess I prepared this actually as an internal view to show what it's costing us in terms of time and delivery of the project while we obtain the funding. And the fact is that financial institutions do not move quickly. And so it's taken us something like 6 months to move from initial discussions with a likely provider through to being close to receiving the money. And I say close, we're still not quite there yet. But as a result, we've effectively lost about 6 months that we couldn't really continue to fund the project. We couldn't continue to buy kit. We couldn't even continue to do much in the way of design, except what we could achieve ourselves by our own efforts, which has been quite considerable, really. And so we are looking forward in the next few weeks to getting to a position where we have the funds to move ahead again. And I think we have a stronger position to move ahead now than we have before.
Yeah, thank you, Andrew. In terms of the progress update, Andrew, do you want to cover this? I'm very happy to.
Well, yeah, but this slide was really just to indicate that we are taking advantage of the latest technologies, as well as doing things as cheaply as humanly possible. So, for example, the National Transmission System requires us to put the highest quality gas into the system. It's probably the most difficult quality requirement anywhere in the world for gas to go into the grid. And so we have gone to enormous lengths to have a quality monitoring and control system which is fit for purpose, which is as cheap as possible, but still meets NTS standards. And I think we've achieved something which is frankly quite a challenge with a system that we have now purchased and which is moving towards being actually constructed.
Yeah, and also, Andrew, I was going to add, how many other gas fields onshore are there in the UK, roughly, do you think?
No idea. Very, very few. Probably very few. Count on one hand, I would think.
Definitely on one hand. I would have said one or two. Nearly all the gas infrastructure and equipment is designed for offshore in the UK. There really isn't a lot of precedent for this kind of a field in recent years. This was in 1999 field. I can't say that there's been more than 5 that I know of in recent decades onshore, which means there's a very low level of infrastructure support for a small to mid-range gas field, which means that you actually, equipment procurement is not simple. You're going abroad and all over the place to get the right bits, and nor is there rational pricing. Most of the big houses in Aberdeen, particularly the design houses, are purposed toward North Sea and North Sea budget. For them, it's very difficult to contemplate a field of this size. And I think West Newton, when, as we all hope it will, comes on stream in some years' time, they will face exactly the situation we've had in terms of procurement, in terms of pricing in the market, and in terms of our size. Our mid-range size makes it really very difficult for us to procure, in addition to protectionist legislation I've already mentioned.
Yeah, I think that is critical, that unlike the US, where there's a huge second-hand market for gas-field equipment, and you can pick up new, used, reconditioned, whatever equipment very, very quickly and easily. Here, everything has to meet CE standards, and the market is minute. So you either build it from scratch at huge expense, or you spend a lot of money converting US-based equipment to meet European standards.
Yeah. I suppose the other things to say here is our EA and HSE permits are all underway. It's a critical part of the whole process. And OGA approval, our field development plan, our final version of it will be with the OGA very shortly. They're not going to say approve this until the financing is in place. So those things should happen more or less simultaneously. Here's where we've ended up with our key equipment. A Caterpillar aerial bundle is one of the most commonly used compression and generation mixes across the world. It's extremely reliable, very good, solid engines. Ours are being rebuilt and completely refurbished according to European spec. Uniflare, we've already acquired the flare. It's one of these shrouded flares that say it burns at extreme high heat in order to minimize emissions. Honeywell, very regular provider of services to all the good and the great in the wholesale industry, in gas in particular. So we're very pleased to have them as a provider of our metering and analysis skids. Delta, I have tried wherever possible to be sourcing locally, or as locally as possible, as far out as Sheffield, so as to fulfil a promise we made to Lincolnshire, which was that we would try and have a manifest benefit on the local economy. Croft is our one new purchase at present from the US, but again, that's being spec to European standards. I just put this in here to say we went with a CPR of a relatively modest gas price, 38p per therm. As you know, on a 10-year average, it's much higher than that. On a 5-year average, that's probably not far off. But there is in all of this this transition work and the oil price crash of last year, a definitive reduction in capex across the industry, and there is the prospect for real spikes in the coming years. I'm not going to be Nostradamus and tell you definitely have a better oil price. We are going to hedge some of this production, but my instinct is for an upward trend over the next decade of the life of the field. Geothermal, let's just go straight into this. We've said here a target to deliver 50 megawatts by 2028. And that may sound ambitious or may not sound at all ambitious. Let's go through some of the economics around geothermal and the reason why we're looking. It's obviously complementary to our business. We've got all the drilling, knowledge of the reservoir that's necessary. Andrew will go through some of these, the detail of what goes on under the ground here and what needs to go on above ground to get electric production, generation. Right now, we put a health warning in there. We've progressed planning, conceptual design and budgeting. We've actually done a huge amount of technical work as well. We also engaged with a US company with some under an NDA with some highly innovative downhole techniques. We've looked at some innovative risk-reducing techniques of our own, and we are in discussions with one particular landlord over a site, and have identified more sites, and we will approach landlords in the coming weeks and months. Just briefly on geothermal, think of essentially three uses. One, geothermal district heating. You don't need an awful lot of temperature, which means you don't need an awful lot of depth, but you do need to spend a heck of a lot on building out pipe work. Two is so-called EGS, or enhanced geothermal systems. That's basically, you've not quite got the extreme heat you need for flash generation, but with a little bit of help of a so-called organic Rankine cycle, you can use different working fluids to obtain the necessary pressures to drive a turbine and generate. And the third type is flash generation. Now, the truth of the matter is the bulk of electricity generation from geothermal around the world that's been successful, and I say the bulk, the overwhelming bulk, is flash generation. And the second point to note is that the overwhelming amount of that electricity generation is from relatively shallow reservoirs, in particular from the Pacific Ring of Fire, all the volcanic region coming up from New Zealand through Philippines, Indonesia, Japan, and then back down through California, Mexico, and Central America. That's probably 80% of all geothermal generation. There is, of course, very good generation in Iceland, Italy, and Turkey, and some in Kenya. But other than that, across Europe, there is a negligible amount of even flash generation, and certainly a negligible amount of this enhanced geothermal generation. We're looking at flash generation, so we're having to get to hot rocks. Hot rocks are deep, so there's one thing in particular that follows from that is the drilling is expensive, and I suppose the focus of our work for the last 6 months has been about how do you de-risk the drilling, and Andrew can share some of our ideas. I'd rather not share them all, Andrew, about this, which are quite well considered. But let's go through some simple economics really quickly. We've heard of estimates of geothermal costs per megawatt hour, and they're about 5 million sterling per megawatt hour. If you look right the way across, be about that. So, which will generate 5 megawatts.
George, I do apologise. You just seem to just skip out there. I think you may have just lost connectivity. If you could just step back a couple of seconds for the audience, that'd be great.
Yeah, surely. We were just going to do some quick economics. There's one paper which I've recently read gave £5 million, very roughly, as the average cost of a megawatt hour of capacity, of geothermal capacity. Now, if we're doing 5 megawatts, you're clearly looking at about 25 million pounds there. In the UK, a good tariff such as those that existed for hydro a couple of years back might get you 6 pence a kilowatt hour. That gives you £60 for a megawatt of capacity. That roughly works out with an 8,000 hour year at around about 2 million quid, just a little bit more. And then you knock off that some OPEX. Now, you do that over 20 years, you barely break even. So there's something very wrong with the economics there. And essentially, apart from some of the risk-reducing measures we're talking about, it's cost reduction in the drilling. Most of the drilling done, certainly in Europe, has not been done by oilmen who have, I believe, more innovative techniques. And the second part of it is obviously scale. Your cost per megawatt hour does fall dramatically as you go up toward larger amounts of generation. So if we went from 5 to 25 megawatt on a single site, we would estimate that the cost there would fall to 3 or even 2 million pound per megawatt hour. And then again, and this is what's difficult for shareholders who are used to looking at oil and gas cash flows to get their head around, is you multiply the resultant cash flow stream over 20 years, and the sums become very, very attractive. Now, Angus clearly doesn't have the budget for that kind of investment. And what I'm talking about from here on in would be more about a period of time when Angus has gone beyond a pilot project, howsoever funded, into what one would call quasi-development phase. Now, I do believe there is lots of capital around for that. So I'm not overawed by the size of the investment required. It's clearly not one we're going to obtain out of the AIM, or I believe ever anyone else would have been able to obtain out of the AIM. I don't think that level of risk appetite exists. So we have been spending some time exploring funding avenues, and I hope to be able to elaborate on them in the coming weeks and months. I've taken a bit too much time on that geothermal economics. I'm going to hand over to you, Andrew, to whiz through these slides, because I'm trying to get through this presentation in the next 10 minutes.
Okay. We looked at the areas that might lend themselves to geothermal energy in the UK. I'm talking about deep geothermal, not heat pumps and things of that sort. The hottest rocks in the UK are clearly in some of the granites in Scotland and in the southwest, in the granites of Dartmoor and Bodmin and Penzance. Now, the interesting thing is that those granites in the southwest are significantly hotter than anywhere else. And they are probably the only granites at this stage that would give us sufficient heat for the current technology to be economically viable. And there are one or two projects which are already in hand in that area, the United Downs in Cornwall and the Eden project also in Cornwall. But those are relatively small demonstration projects, and we see a need to move gradually beyond that to something which can be scaled up into a full-sized power station. Let's move on to the next slide. This shows the reason why we like this area in particular. The colours show the heat production from the granite, which is highest in the areas around the edge of each granite, and in particular in northeast Dartmoor. But also it compares on the right-hand side the heat generated by granites in Scotland, but also the heat flow that comes from them. And it's abundantly clear that the heat flow in the granites in Cornwall is much higher than in Scotland, and therefore the amount of heat that you can take from an individual well and an individual region of the granite is much greater. So we believe that this is an obvious area to look at. I'm particularly excited about it because I live there. But the feeling is that this is the opportunity in the UK. Now, granite is pretty hard rock, and it is virtually impermeable. So the only way in which you're going to get large quantities of water to move around it is if there's a natural fracture system. Where, as we've said many, many times in the past, Angus is not into fracking, and therefore we will need to look for natural fractures in the rock itself. We looked at the geology of the area and found the largest faults in the area of the southwest granites, and those are the areas that we're targeting for our development. So we're looking at areas with massive, deep faults, particularly in the area east of Dartmour, where we can reasonably guarantee that there will be high enough flow rates of water that are necessary for power generation. Now, as George touched on, the question of how on earth we try and keep the cost down for drilling. Now, if you grind your way slowly through granite, it's going to take a long time and cost a great deal. So we're looking at ways and means of avoiding that by drilling our well through the relatively softer, still quite hard, but relatively softer rocks around the granite, and then turning into the granite at a depth that we need to. That way we believe we can shave a significant amount of time off the drilling time. We also, using the sort of technologies that are common in oil and gas wells throughout the world, we don't really see a need for two wells. We can return the cooler water into the granite using the same well bore, just with the technology of multilaterals. So we believe there are ways and means of reducing the costs of drilling. We're also looking at the technology of drilling itself and looking at new methods which are more suited to this sort of rock and conditions. With this, we aim to achieve temperatures around about 200 degrees centigrade at the bottom of the well, and it's comforting to know that at the United Downs, very slightly shallower well than we had in mind, they are achieving about 190 degrees centigrade at the bottom of the well, so it's certainly achievable. So we are moving towards looking for a precise location for drilling. We're looking at designs of wells. We're looking at the equipment and starting to look at different types of turbine for generating power. And in short, we are moving through the initial stages of our feasibility study and conceptual design to come up with a project which is viable. And we're talking to a range of different contractors and consultants to get this right.
So, okay, back. Yeah, I think you covered that quite well there, Andrew. We're going to whistle through the oil assets. There is, we call this good husbandry in transition, because we recognise that these fields are, if you like, they have a shelf life, but the shelf life is we believe a good happy 7, 8, 9, 10 years away. Lidsey is part of a separate presentation which we won't go into now, but we paused. Basically, there's been, I think, 4 operators in history on this field over 30 years, and it's somewhat remarkable to me. I don't have that length of time in the industry to discover that it's not uncommon to take seismic without making allowance for different levels of different material, so-called depth conversion work. Well, it's depth conversion work was never done on this field, and we have done it. And it's shown quite remarkable resulting variation, which really does fit entirely with the experience we had on X2 and the experience one of our previous operators had on X1. So we basically are going out right now, and we're going to do some straightforward seismic acquisition, a thumper along a road for which we've already budgeted and squirreled away some money. That will be followed by some 2 months, Andrew, work on reprocessing.
We'll be reprocessing the existing seismic lines. We are adding one additional line which will help us tie the old seismic together more effectively, and then reinterpreting the revised data, which we've seen some sample lines that have been worked on, and the quality is very good, and this should help us to confirm the new structures in enough detail that they could then be drilled.
Yeah,
I think I would just add that it was abundantly clear after drilling the X2 well that something was wrong. All of the previous mapping did not map the position of that well correctly, and so we went back to the absolute basics of trying to identify what was wrong, and we found one common factor between all the previous mapping over the last 30 years or so, and addressed that particular problem.
Yeah. So that's it's by I think quite happy coincidence. We now have 80% of that field. Now the recoverables mentioned in the Competent Persons report back in 2015-16 were very, very low, because the only well that he had to go off was the X1. But nonetheless, the oil in place figure is a good high figure, and depending on, we will do a small Competent Persons report at the end of this seismic interpretation process this year, partly with a view, dear shareholders, to selling some of this license down to fund the sidetrack, so that we're not coming to you. We're hoping this will be self-funding, and And I think what we'd like to do that is close out the seismic, get a planning permission in, and get any EA permitting in, and have a small competent persons report validating our analysis. Now, if that we get all that together, it's an extremely attractive package, because unlike some sites, it's not particularly contentious from an environmental point of view. It will be easy to drill. It's got a nice trunk road near it. It's got sewerage plant next door, landfill site. It's not one which jumps out at you as being highly sensitive. Not to say there's not nice countryside around, but it doesn't suffer some of the burdens that some other sites do, with special scientific interest and AONB and so forth. So I think it could be a ready to drill opportunity by the end of the year, and our task to go and get some funding to get it drilled. Actually, I just go back there, Andrew. It's not fair to talk about the value of oil in place, but if you if you talk about fractions of the oil in place, well, clearly this oil in place, 9 million barrels, even if a minute fraction were obtainable, and no competent person has said that it is, so 10% even, would be in itself worth, at £30 a barrel, a very considerable sum. We have 80% of that. So when I say very considerable,
I think it's worth saying that this field has never been considered for a proper development. It's always there was one appraisal well that was right on the edge, and that clearly wasn't the basis for a future development. We went into the X2 well with the hope that that would be the start of the development, and clearly it wasn't. If we now have a reliable structure map, then we are in a position to go back to basics and plan the development of the field, and that should yield a sensible recovery from the available oil in place.
Yeah, a very considerable one. Okay, Brockham, that cement bond log which we promised was completed, and that will shortly be, as in early next week, rubber stamped by a third party and submitted to the Environment Agency, who have all of the previous work, the hydrogeological risk assessment, and we have been through an enhanced pre-app service there, and I'm hopeful that they will grant permission to re-inject, and that this will improve recoveries. And I'm not going to go into any further technical detail on that. Lastly, very disappointing this week, we got pushback by the planning committee at West Sussex County Council. I haven't yet seen, at least as of this afternoon, their formal reasons, written response, and written reasons for declining the application. We will certainly engage with their planning services department and discuss them, and discuss any requirements they put on us. And we will also consult our own legal advisors and counsel as to whether or not to challenge this decision. I don't want to prejudice those discussions. My strong inclination at present is to challenge. I strongly believe, as I began this discussion, and it's one of the reasons I began in this fashion, was to make this plain that transition is not about shutting down every oil field in the UK and putting people out of work and saying, well, don't worry, some Danes will come in and put another offshore wind farm down. It's about, and the government makes it clear in that white paper, it's about helping oil companies to repivot toward good things. But it doesn't say you just abandon historical legacy assets where you've sunk millions of pounds of shareholders' money in, and just walk away and say, all right, well, bad luck, you're bust, piss off, Angus. So I don't agree with their interpretation. I don't agree with their interpretation of public interest. I think the government made it very plain. Energy security and the benefit to the UK economy from continued oil extraction, to which I might add the benefit of maintaining an engineering and skills base onshore is important and is in the public interest and is a manifest defence for the very modest and sensitively managed works we were proposing there. That's my personal view. The board will take a decision when it's had legal advice on this matter and when we've had an opportunity to talk in a less charged environment with the Planning Department of West Sussex. So that's it, gents. I'm going to go straight into Q&A.
Fantastic, George, Andrew, thank you very much for your presentation there. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review those investor questions submitted already, I'd like to remind you that recording this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. George, Andrew, we have received a number of pre-submitted questions from investors, and perhaps I could just start off the Q&A session with those, if I may.
Please do.
The first question we've had here is, please can you elaborate on the economics around geothermal? And I know you've touched on this in the presentation itself. What kind of value could be added to the market capitalisation of Angus over time?
Thanks, Paul. I'll just go back over some of those numbers because they're rather garbled. We spoke about £5 million per megawatt to get geothermal running. And we said, well, that's 5 megawatts, which might be a single closed loop system. You're looking at 25 million quid, and the economics don't really stack up, at least at UK electricity prices. They probably would at German ones and Danish ones, which, like ours, are inflated to support wind and solar, but more so. However, if you start talking about 5 of those systems, so you go up to sort of 25, or even 4, go up to, keep the numbers nice and round, and you take you take revenues up to about £10 million a year at a feed-in tariff of, say, £60 a megawatt hour. Over 20 years, you'll have some 200 million of revenue, and your economies of scale in terms of maintenance operating costs come right down. So perhaps even 190 of net revenue, net operating cash flow. So against that, you're not necessarily looking at the same level of 5 times 25 of cost, because we really are going to work down the well cost there. You're still going to have, and we're also working down the capital cost of the equipment. Basically, on some simple economics, there could be, in a project like that, of 20 to 25 megawatts, about 120 million pounds worth of value. Now, Angus is not going to get all of that because he's not going to be able to fund all of it. But it only has to take a relatively small fraction to have a very material impact on our share price. And we're talking about one well pad there. And we'd hope for a reasonable fraction as operator, and we would make some investment ourselves. So I'm trying to give people an idea of the scale of one site and how 4 or 5 loop systems on one site could generate over 20 years a kind of figures like 200 million. And if you work the front end and the cost right, even if you need a little bit of grant money here and there to get risk capital in there, not to justify the economics, but to get the risk capital in there, there's a, once you break over the exploration phase, there's a tremendous value accretion for Angus and its shareholders, and a long-term raison d'etre for the company going well beyond oil. So yes, I strongly believe that there is good economics in geothermal. Thanks, Paul. Next one.
Next one we've got here is, what sort of timeline is realistic on these projects? Again, relating back to geothermal. Yeah,
well, timeline in the UK is a nightmare. As in any Western European country, you pay for living in a very civilized country with good protection. 18 months is a bare minimum for getting anything done. Frankly, getting a shovel into the ground. In terms of what we can do in terms of funding and planning while that process is going on, I think we can squeeze a heck of a lot into those 18 months. That means that what follows isn't extensive. And I've also would like to say this. When I took over, Balcombe had just been closed out by accident as a possibility, and we were into long-term issues with Brockham, which went wrong very rapidly, and after that, the acquisition of Saltfleetby, all of these things, you find you've gotten over one regulatory hurdle, takes 6 months, then you're straight into another one, it's another 6 months, and into another one, and so on. There is no single system here, and very often one regulator would like to see one permission completed. So 18 months is a bare minimum. What I think you can do in this country is have a lot of these projects. We only had 2 or 3. I'd like to see us have 8 on the shelf, permanently running through the regulatory system, and you just take them out when they're nicely when they're ready to go. So I won't apologize for the past and the tremendous frustration and delays we've had, but it is now a fact of life, and it's a fact of life you can only overcome by having a pipeline. Thanks, Paul. Next question. Thank you.
On Saltfleetby, can you walk us through some of the delays and cost overruns and give us assurances that this is not a black hole?
Oh, that is not a black hole. That this thing can chuck out a heck of a lot of money. I have absolutely no doubt. At moderate, we've taken the CPR numbers for peak production, plateau production, because it runs for a few years. The field, even at at the forward curve, is chucking out 14 odd million pounds a year gross, and the fixed cost there is 2 million. So ignoring lending costs and servicing debt, this thing, well, certainly after the loan is repaid, which we hope will be accelerated repayment, this thing could chuck 7 odd million quid at Angus at CPR prices every year, and that's our market cap every year. So it's no black hole. Delays, I won't toss it off and say, oh, it's a big project. It is a relatively big project because we don't have a lot of natural comparisons or comparators or fellow people in the industry who are doing a similar thing. So the whole industry is geared towards serving the North Sea, not small gas fields. There are issues with that, and it was a surprise. Perhaps it shouldn't have been a surprise. It certainly wasn't something which shareholders raised with us. We ourselves were quite surprised by the paucity of other gas fields onshore in the UK. That's a material part of the problems we've had in terms of equipment procurement. But I believe that we're over them. I believe, if anything, prices have been coming in since the announcement in November, and that we will be able to get a better deal for shareholders than we announced then.
Thank you. I think you just touched on this one as well, and it was when the debt is out of the way, what kind of cash can this field generate after costs each year? I think you have just touched on it, George. If there's anything else you can add there.
No, except to say, as I hope it will be with a good following win, we'll get the debt clear out of our hair within 3 or 4 years. The target, the facility is there for 4 years, but it is possible to repay it early and de-risk the whole project for everyone.
Fantastic, thank you. Let's move on to the next one. How soon will you know if the new seismic line supports the company's view of the reservoir at Lidsey?
Well, Andrew, that's one for you. When you put your thumpers on the ground, how quickly?
We hope we hope to acquire the new seismic line in about 4 weeks' time. It'll only take a few days to actually do it, but as most of these things, it takes a lot longer to get approval. So in about 4 weeks' time, we should be acquiring the seismic line. A few weeks after that, we should have the processing completed. So I'm hoping that in about 2 to 3 months from now, we should have a reliable new map of the field. We'll perform a competent person's report at around about that time, and I would hope that by the summer we are ready to try and have a definite farm out of the asset, so that we can fund the drilling of a new well.
Fantastic. Andrew, by the way, once the seismic line's been acquired and plotted out, does that give you any quick indication? Is there anything you can announce?
Not really, no. We need to have the new seismic line, which basically just ties together a lot of north-south lines that have previously been hard to tie together properly. It enables us to have a much more reliable mapping of the structure. We're pretty convinced that the new mapping now, with the proper depth conversion, is correct, but we would like to refine it still further and have a structural map that we can hang our hat on by the summer.
Great. Paul, next one.
Thank you. What are the intentions of the company with regard to Brockham?
It is to obtain this Environment Agency permit for water injection. That water injection will hopefully support the reservoir and improve recoveries from the existing producer well. We have as well, I think, Andrew, you could explain this, a possibility not yet permitted to use the BRX4Z well that was addressing the Kimmeridge a couple of years back, in order to improve recoveries further. And Andrew, you might explain where the BRX4Z.
Yeah, so that particular well, which was drilled for the Kimmeridge, happens to be very favourably placed for the Portland. In fact, it's more or less on the crest of the structure, and so we have the opportunity to abandon the Kimmeridge section and perforate the Portland in that well at relatively modest cost, meeting some of the requirements of the OGA to ensure that we keep on top of well abandonment, and at the same time give us another producer. So I'm quite excited about the possibility of adding another well in right on the top of the structure where it's needed.
Thanks. Paul, next one.
I'm just conscious of time as we're coming up to the hour. I think we've got a couple of questions further that we can go through, if that's okay. Just let's start with the next one we've got here. If the company's view is correct, how soon could the reservoir be drilled?
Lidsey. That I would like to think that we have an opportunity to get straight in. Well, what we will do, as I said earlier, is we will submit planning regardless. Again, this comes down to our chastened knowledge that you just press ahead into the system. You don't try and run anything concurrently, but you've just got to fire all guns, because the wait time otherwise is crucifying for any business in the UK if they're not in oil and gas. So we would submit planning now. I mean, it's conceivable we could get planning this year. As I say, we don't believe it's a contentious site. I can't speak for how council will come to treat it, but we don't believe so. Our view might be it could be shovel ready by the end of the year. The key would be funding. Andrew, we have no firm well cost, but for this sort of well, what would you say, this length of sidetrack?
I think I'd rather
this is not becoming advising. Yeah, I think it's probably dangerous because I'll only have to release an RNS or something.
Yes, absolutely. But what I would say is that our intention is to do all of the relatively low cost work, which is required to prepare to drill. So this is the mapping, the reserve determination, the well design, the planning and applications and approvals, and then with a farming say, there you go, this is ready to drill. You pay for the well, and you get a percentage of the license. Yeah,
exactly. And if a small, although again we reiterate, it's not this is not a competent person's report, but clearly, if we were lucky enough to get 20% recoveries, say, then these figures really do dwarf the relatively simple tasks to hand. So in terms of risk to reward, it's bloody good. It is good. If Andrew and his team's seismic is correct, which I believe it is, and our partners in that field believe it is, their experts believe it is, and our own third party people believe it is. So, and you yourself can judge from that detailed presentation whether or not it's worth the candle. But I think the risk reward here is really very good for shareholders, particularly if we're able to fund this by selling down some of our very large interest in the field. So, yeah, soon and good risk reward.
Thank you, George. Thank you, Andrew. As I say, I've just gone through the hour. George, I don't know if there are any other questions you can see that you could just perhaps pick off at the end, or I think I've got one more here, just unless you can.
I've got one here, which is from Simon C. What are the near-term catalysts for the business in creating value? Well, clearly, everyone is waiting for a decision on Saltfleetby, not a decision, the hearing and announcement of funding. We're very confident about it. That's going to be not so much a catalyst for the business, but it'll certainly be a catalyst for the share price. But for us, beyond that, I believe actually Lidsey is also a great accretion to the real value in the business, and it's a thing I've been most excited about, apart from Saltfleetby, since I joined. So I'd love to see that firmed up and funded and permitted. Thanks.
Thank you, and thank you both to George and Andrew. I think you've addressed a number of those questions, and of course you'll review all questions submitted today, and we'll publish those answers back on the Investor Meet Company platform. George, perhaps I could just ask you just for a few final words to wrap up, please, if possible.
Yes, I'd just like to say we hear frustration and anger at cost overruns and time overruns. I won't say these aren't our fault. There's some things you can anticipate. There's some things you can't. But I don't see this as a pattern. I see it as a peculiarity. We are, as I say, relatively unique in being a mid-sized onshore UK gas field, and even being able to wrangle our way through all the regulation and the irrationality of the supply market around us and the legislation around us. It's not been a doddle. We haven't got everything perfect, but it's not a function of absolute incompetence or stupidity. I can guarantee you that it is quite a task. People work bloody hard here for shareholders, and I think we've got some great prospects for you. So hang on in there. It will be good.
Thank you very much indeed, George. Andrew, thank you for updating investors today. Can I please ask investors not to close the session? You'll be automatically redirected for the opportunity to provide your feedback. If you've accessed the meeting from the website, the feedback page will appear in front of you. Access the meeting via the link sent to you in the email. You'll simply be asked to log back in and submit your feedback, which takes just a few seconds and is greatly appreciated by the company. On behalf of Angus Energy PLC, we'd like to thank you for attending today's session. That now concludes today's event. Thank you again and good evening.